The crypto crash of 2022. If 2021 was the year of euphoria, 2022 was the year of reckoning. The explosive growth of DeFi, NFTs, and meme coins collided with harsh macroeconomic realities, structural weaknesses, and outright fraud. The result was a chain reaction of collapses that wiped out trillions of dollars in value, shattered public trust, and forced the industry to confront its darkest flaws. This chapter is about the storm, the crash of 2022, the calm before the storm. By the end of 2021, crypto seemed unstoppable. Bitcoin had touched $69,000, its all-time high. Ethereum was thriving with NFTs and DeFi. Venture capital firms were pouring billions into Web3 startups. Celebrities were endorsing coins, NFTs, and exchanges. But beneath the hype, warning signs were flashing. Overleveraging. Many hedge funds and platforms borrowed heavily, betting on perpetual growth. Ponzi-nomics, unsustainable yields, 20% plus APY, attracted users without real backing. Macro pressure, rising inflation and interest rates signaled an end to cheap money. Crypto was a castle built on optimism, and in 2022, the tide began to recede. The Terra Luna collapse, May 2022. The first domino to fall was Terra Luna, once hailed as a top 10 blockchain. The promised Terra's algorithmic stablecoin, UST, was supposed to hold $1 value without being backed 1.1 by fiat. Instead, it used a mint and burn mechanism with Luna to stabilize the peg. Anchor Protocol promised 20% yields on UST deposits, attracting billions. The collapse. In May 2022, UST began losing its peg. Panic spread as billions of UST were withdrawn from Anchor. Luna's supply hyperinflated as the system tried, and failed, to restore the peg. Within days, Luna collapsed from 80 plus to near zero. Impact over $60 billion in value was wiped out. Retail investors lost life savings. Do Kwon, Terra's founder, became one of the most infamous figures in crypto history. In June 2022, Celsius froze withdrawals, leaving hundreds of thousands of users locked out. Voyager Digital, a popular retail-friendly exchange and lender, suffered huge losses from exposure to Three Arrows Capital, 3AC. Filed for bankruptcy in July 2022. Three Arrows Capital, 3AC, once the largest crypto hedge fund, managing billions. Built a reputation for smart bets, but was massively over-leveraged. The Terra collapse destroyed its positions, and its founders went into hiding. The fall of 3AC was like Lehman Brothers for crypto. Institutions across the industry had lent money to 3AC. When it defaulted, dominoes toppled everywhere. The Ethereum merge hype meets bear market reality. Amid the chaos, Ethereum prepared for its biggest upgrade. The merge, shifting from proof of work to proof of stake. Hopes ran high. It would make Ethereum greener and more scalable. But macroeconomic conditions overshadowed progress. By mid-2022, ETH had fallen from $4,800 to under $1,000. The merge succeeded technically, but investors were too shell-shocked to celebrate. The FTX meltdown, November 2022. If Terra was the first earthquake, FTX was the tsunami, the rise of FTX. Founded by Sam Bankman-Fried, SBF, hailed as crypto's White Knight, FTX became the world's second-largest exchange, backed by top VCs and celebrities. SBF donated to politicians, testified before Congress, and was called the J.P. Morgan of crypto. The fall. In November 2022, a CoinDesk report revealed that Alameda Research, SBF's trading firm, held billions in FTT, FTX's token, raising solvency concerns. A liquidity crisis followed when Binance announced it would sell its FTT holdings. Within days, users rushed to withdraw billions, and FTX collapsed overnight. Investigations revealed that customer deposits were secretly misused to fund risky bets and political donations. Impact: over $8 billion in customer funds vanished. Millions of retail and institutional users were left stranded. SBF was arrested and charged with fraud, triggering one of the biggest scandals in financial history. FTX's fall wasn't just a crypto story, it was global headline news. The market carnage. The year's disasters took a brutal toll. Bitcoin crashed from $69,000, NuV 2021, to $15,700, NuV 2022. Ethereum fell from $4,800 to $880. Total market cap shrunk from $3 trillion to under $800 billion. Millions of newcomers who entered in 2021 at peak hype were left devastated. The phrase crypto winter returned with full force. Regulatory backlash. The 2022 crash triggered global regulators into action. US SEC and CFTC cracked down on exchanges and lending platforms. Europe advanced MiCA, markets in crypto assets regulation. Asia, countries like Singapore tightened licensing and oversight. Where 2021 was about freedom, 2022 was about scrutiny and accountability. Lessons of the crash. 2022 was brutal, but it revealed essential truths. Not your keys, not your coins. Centralized platforms could fail, but self-custody endured. Sustainable models only. Unsustainable yields and Ponzi-like structures eventually collapse. Transparency matters. On-chain systems survived while opaque centralized firms crumbled. Resilience of Bitcoin and Ethereum. Despite everything, they did not fail, proving the base layer was stronger than the hype. Conclusion: the year that broke illusions. The crash of 2022 was a reset button. It humbled the industry, exposed frauds, and reminded the world that crypto is not invincible. But out of the ashes came resilience. Builders kept building, protocols kept running, and the community began rethinking what a sustainable Web3 future should look like. History would judge 2022 not only as a year of collapse, but also as the year that burned away illusions, leaving behind the hardened steel on which the next phase of crypto could rise.